Welcome to this edition of Ethical Sustainable Investment News and Analysis to Profit By. I'm Ron Robbins, an ethical investing pioneer for over 40 years, quoted in the Wall Street Journal, MarketWatch, the Globe and Mail, and numerous other media, and founder of the highly respected global ethical sustainable investing information website, Investing for the Soul. And please listen to my disclaimer statement at the end of this podcast. Now enjoy this podcast. Hello, Ron Robbins here. Welcome to my podcast, episode 168, published on June 26, 2026, titled June 2026 Sustainable Stock and ETF Picks. This podcast is presented by Investing for the Soul. Investingforthesoul.com is your go-to site for vital global, ethical and sustainable investing mentoring, news, commentary, information and resources. Remember that you can find a full transcript and links to content, including stock symbols and bonus material, on this episode's podcast page at investingforthesoul.com/podcasts. Also, a reminder, I do not evaluate any of the stocks or funds mentioned in these podcasts, and I don't receive any compensation from anyone covered in these podcasts. Furthermore, I will reveal any investments I have in the investments mentioned herein. I have a great crop of 16 articles for you in this podcast. Note, sometimes companies are covered more than once. Now, with so many articles to potentially cover, I've chosen 4 to quote from. Titles and links to the other 12 can be found on the webpage for this podcast edition. Now, fuel cell stocks have attracted considerable investor attention recently, particularly for the potential to power AI data centers. Here is the first of 2 articles concerning the extraordinary rise in 2026. You could glean from these articles if investing in them still makes sense for you. The first article is titled, "Which Fuel Cell Stock Has Dominated in 2026? Plug Power, Fuel Cell, or Bloom Energy?" And it's from finance.yahoo.com. It's by David Modell. Here are some key quotes from Mr. Modell. Fuel cell stocks have been one of the 2026's loudest comeback trades, but the leaderboard isn't close. Bloom Energy stock has crushed its 2 main peers to date, riding AI data center demand and a string of earnings beats. Fuel Cell Energy stock sits in a distant second, and Plug Power stock rounds out the trio. So Bloom Energy, the clear 2026 leader. Bloom Energy stock is up 219% year to date in 2026, far ahead of its fuel cell peers. Shares trade at around $278, and the company carries a market cap of roughly $79.09 billion, which dwarfs Bloom Energy's rivals. Fuel Cell Energy a distant second. Fuel Cell Energy stock is up 135% year to date in 2026, a strong rebound but well behind Bloom Energy stock. Shares trade at $17 and change, with a market cap near $1.16 billion. Plug Power, third place. Plug Power stock is up 42% year to date in 2026, the weakest finish among the 3 names. Shares trade at $2.81, making Plug stock a low-priced name that could swing hard on news. So what to watch for from here? The 2026 scoreboard for Bloom Energy, Fuel Cell Energy, and Plug Power tells a clear story. Bloom Energy leads on both share price performance and underlying business momentum, while Fuel Cell and Plug Power are riding sector enthusiasm off low bases. Investors weighing their exposure may want to moderate their position sizes given how far these names have already run." End quotes. Now, the second of the two articles on fuel cell stock boom is this one. It's titled Bloom Energy versus Fuel Cell Energy. Which clean energy stock leads? It's by Joel Sahar at Zacks. Now some top quotes from the article. Key takeaways. Bloom Energy shows bigger 2026 to 2027 earnings per share estimate gains over 60 days than Fuel Cell Energy. Bloom Energy's return on invested capital is 5.67% versus Fuel Cell Energy's minus 14.9%, showing a wide efficiency gap. Fuel Cell Energy has lower debt to capital, but Bloom Energy led in one-year share price gains. So Bloom Energy is well positioned to benefit from rising demand for reliable, low-carbon and on-site power solutions. Its solid oxide fuel cell technology delivers highly efficient and ultra-clean electricity, enabling businesses to reduce dependence on increasingly stressed power grids. Fuel Cell Energy also offers investors exposure to the growing market for clean, reliable, and distributed energy solutions. The company stands to benefit from increasing adoption of hydrogen production, carbon capture technologies, and on-site energy systems designed to reduce grid pressure while supporting decarbonization goals. Bloom Energy and Fuel Cell Energy's earnings estimates. The Zacks consensus estimate for Bloom Energy's earnings per share in 2026 and 2027 implies an increase of 50.39% and 38.19% respectively. The same for Fuel Cell Energy's earnings per share in 2026 and 2027 remain unchanged. Return on invested capital. The return on invested capital measures how effectively a company uses debt and equity to generate profits. It shows the return earned on each dollar invested and helps investors evaluate how efficiently management allocates capital to value-creating opportunities. Return on invested capital of Bloom Energy is currently pegged at 5.67% against Fuel Cell Energy's negative 14.9%. Debt to capital and tie ratio. These firms need substantial funding for research and development, production expansion, and large-scale project builds. Fuel Cell Energy's current debt to capital is 17.54%, compared with Bloom Energy's 73.3%. The times interest earned ratio, commonly referred to as the interest coverage ratio, evaluates a company's ability to meet its regular interest obligations using operating earnings. At present, Bloom Energy's tie ratio is 1.3 against Fuel Cell Energy's tie of the negative 16.6. Valuation. Bloom Energy's shares are trading at a premium compared with Fuel Cell Energy shares on a price-to-sales fiscal 12-month basis. Bloom Energy's shares are presently trading at price to sales fiscal 12 months of 17.86 times compared with fuel cell energy's 6.85 times. Stock price performance. In the past year, shares of fuel cell energy have gained 377.3% compared with Bloom Energy's rally of 1,470.2%. Summing up, based on the above discussion, it is evident that Bloom Energy has a marginal edge over fuel cell energy based on better earnings estimate movement, healthier price performance in the past year, and much better return on invested capital. Bloom Energy currently sports a Zacks rank number 1 strong buy, while fuel cell energy has a Zacks rank number 3 hold. End quotes. This next article provides a good overview with recommendations of funds that many of you might be interested in. It's titled 7 Best Socially Responsible Funds from money.usnews.com. It's by Jeff Reeves. Here's some quotes by Mr. Reeves on each of his picks. For those who care about socially responsible investing, this list of exchange-traded funds, ETFs, can help investors vote with their wallets by supporting companies that align with their values. 1. iShares ESG Aware MSCI USA ETF. This iShares fund is the largest ETF that invests in companies that prioritize environmental, social, and governance as ESG criteria. It's also an index fund with an affordable expense ratio. 2. Vanguard ESG US Stock ETF. Though slightly smaller than iShares ESG Aware MSCI USA ETF in terms of assets, this Vanguard ESG ETF is significantly larger when it comes to its portfolio, with more than 1,200 companies across the US stock market. 3. State Street SPDR, that SPDR, S&P 500 ESG ETF. This fund starts with the popular S&P 500 benchmark, then excludes stocks that don't align with ESG criteria, including companies involved with tobacco, coal, and other less savory business lines. 4. iShares ESG Aware MSCI EAFE ETF. A variant on this theme, iShares ESG Aware MSCI EAFE ETF offers exposure to overseas investments with a focus on developed markets in the EAFE region, that is Europe, Australasia, and the Far East. 5. iShares ESG Aware MSCI EM ETF. For investors looking to tap into growth overseas while avoiding morally questionable businesses, this ETF offers emerging market exposure as well as peace of mind. 6. iShares Global Clean Energy ETF. Moving towards companies with a direct stake in making a difference in the world, iShares Global Clean Energy ETF is the largest clean energy ETF on Wall Street. 7. State Street SPDR SPDR MSCI USA Gender Diversity ETF. This Gender Diversity ETF seeks to prioritize U.S. companies that lead their sector in their commitment to promoting and supporting gender diversity throughout all levels of the organization. Incidentally, there's a chart on the website for this podcast with much more details concerning the cost of these funds and the size of them. So that ends the quotes from this particular article. This last article follows on from the previous one on various ESG ETFs. It's titled 3 Magnificent Green ETFs to Buy in 2026, found on the website theglobalmail.com. It's by Dana George at The Motley Fool. Here are some quotes from the article. Key points. Green refers to assets that work toward environmental sustainability. iShares Global Clean Energy ETF is one of the oldest, most popular clean energy ETFs, while Invesco has the highest expense ratio of the 3 ETFs. It has experienced significant gains. So 1. iShares Global Clean Energy ETF. The iShares Global Clean Energy ETF tracks the S&P Global Clean Energy Transition Index, which comprises global equities across solar, wind, hydro, and other renewable energy sources. With a portfolio of 105 holdings as of June 8th, the fund is one of the oldest and most widely purchased clean energy ETFs. The fund may be right for you if you're seeking broad, diversified exposure to global clean energy. You're looking for an investment that's generally less volatile than a solar-only ETF. You're willing to hold it for the long term. If you're uncomfortable with the higher volatility often associated with emerging sectors, such as clean energy stocks, this may not be right for you. And if you're seeking income, this ETF probably won't be ideal, as many clean energy companies reinvest profits for growth rather than paying regular dividends. 2. Invesco Solar ETF. The Invesco Solar ETF is a highly focused, industry-specific fund that tracks the MAC Global Solar Energy Index. Specifically, Invesco Solar is interested in solar power equipment, solar project development and installation, and related solar technology and components. This ETF offers heavy representation of US, Asian, and European solar companies, and may be a good fit if you're specifically seeking targeted exposure to solar. However, it may be more volatile than you initially expected. Invesco Solar typically fits best as a single spoke in a well-balanced portfolio. And number 3, SPDR SPDR S&P 500 ESG ETF. This ETF tracks the S&P 500 Scored and Screened Index, formerly known as the S&P 500 ESG Index. The fund starts with the traditional S&P 500 and excludes companies that don't meet certain ESG criteria. The index goes further by tilting its weighting towards higher scoring ESG companies. Because the fund aims to maintain a sector and risk profile similar to the S&P 500, it's not necessarily a clean energy or climate-only product, but rather a broad, large-cap US equity fund. End quotes. Now don't forget that I have titles and links to 12 more great articles showcasing sustainable and ESG-oriented companies and ETF picks on the web page for this podcast edition. These are my top news stories with the stock and fund tips for this podcast. June 2026 Sustainable Stock and ETF Picks. Please click the like and subscribe buttons wherever you download or listen to this podcast. That helps bring these podcasts to others like you. And do click the share buttons to share this podcast with your friends and family. Let's promote ethical and sustainable investing as a force for hope and prosperity in these tumultuous times. Contact me if you have any questions. Thank you for listening. My next podcast will be on July 31st. See you then. Bye for now. Learn how to create a simple portfolio reflecting your personal values by taking my 1-hour tutorial. Go to investingforthesoul.com/podcasts and click the link in the right-hand column for my DIY Ethical Sustainable Investing Pays tutorial. Now, I'll mention in the podcast if I have any direct interest or holdings in companies or securities I'm talking about. Furthermore, any news, opinions, analysis, or other information offered by myself, as well as references and information to or from other external sources in this podcast, is provided as general market information and should not be relied upon and thus does not constitute investment advice. Investors should consult their own licensed investment professional before making investments. Also, I will not accept liability for any loss or damage, including without limitation any loss of profit, which may arise directly or indirectly from use of or reliance on information in this podcast. Do contact me at ronr@investingforthesoul.com. Signing off, this is Ron Robbins.